Chamath, you have acquired a powerful and influential voice, increasingly so, on Wall Street. Why were you so excited by the GameStop short squeeze and then so outraged when Robinhood had to throttle buy orders?
Look, on the way in, I think what GameStop showed was the narrative fallacy on Wall Street. I think for years, there was these folks that sort of, were these wizards behind the veil. And they had a way of conducting themselves that purported to be just intellectually superior to everybody else. But in reality, what that short showed was that they were prone to the same, poor decision-making and broken systems and technologies that everybody else has to deal with. And so I found that kind of funny. I think it also spoke to the fact that, we really haven't looked closely enough at the systems that were broken as a result of 1998 and LTCM, long-term capital management, then 2006, 7, and 8 with Bear and Lehman. And we're allowing the same problem, slightly different, but roughly the same problem to repeat itself over and over again. And so that's what sort of angered me about GameStop. And then on the back end of it, I just felt like these two worlds collided in a way where I doubt that in the end, in the final analysis, there was any collusion of any kind. But just the stench of this whole thing just goes to show you, back to where we were talking about before, about how difficult it is for normal, everyday folks to have access to any kind of return. So if we break down the capitalist philosophy, they are just fundamentally stuck in this cul-de-sac of always being labor and always being sort of at the, ownership of capital, of the ownership class. And the fact that normal folks can't get access to returns and, close the inequality gap is just going to make all of the things we're dealing with today a lot worse than they already are.